Mike Santolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on November 21st. And just as a housekeeping note, our offices will be open for like the first half of the week next week, obviously with Thanksgiving coming up. I hope everyone here has a great Thanksgiving. If you do have any questions, all the advisories and stuff should get their stuff out either on time or ahead of time, so you have it. Next week, if you have any questions and you're a subscriber, again, don't hesitate to email me directly, mike@cabotwealth.com. Okay. When it comes to the overall market, the evidence has been really worsening, especially since November happened. And there's been some stick saves or some attempts at buying the dip, including today as I record this. So we'll see how it goes. But just looking at the evidence, the intermediate term evidence, it's mostly negative here, whether you're looking at the trend, the broad market, the action of individual stocks, our aggression index, which is like growth versus defense. Some defensive measures have perked up. So the sellers are in control right now. Longer term, most of the evidence is still positive, whether you're looking at the long-term trend or just some of the breadcrumbs the market has left in recent months. The strong, persistent run, we've gone over this a few times, tends to lead to good things down the road. It doesn't just up and die after 6 or 7 months. And just as an aside, I mentioned this on a webinar this week that we had for Cabot, at Cabot. Having a huge decline earlier this year and then running to new highs and having a huge decline later in the year, I don't ever remember that happening. Doesn't mean it can't happen, but the odds favor what I'm trying to say, that this is a correction. Maybe it lasts another week or two. Maybe it lasts a few more weeks. It takes time. We'll see how it plays out, but the odds favor there's going to be another leg up. There's going to be some more leadership, probably going to be broader leadership than just a few AI infrastructure names like we saw in recent months. Okay, so that's a time to look forward to. But right now, going with what's in front of us, we are playing defense. We're being cautious here. Doesn't mean you can't do a little nibbling. Doesn't mean you have to sell wholesale, anything like that. But we're staying relatively close to shore here and just letting the selling and everyone hacking it out, letting all that action play out. And then when we're ready for the next sustained uptrend, that's when the real money will be made. In Cabot Growth Investors model portfolio, we're about 2/3 in cash. Of course, we've had a lot of cash because a lot of the growth complex really hasn't been kicking into gear for the last 2, 3, 4 months. But we're about 2/3 in cash, and we'll just take it, like I said, day to day, week to week from here. There will be some good money, I think, made in the next uptrend, especially if the fear level gets up and some of these speculative things get unwound and there's some worries out there that can really provide, load the bullish gun, so to speak. But for now, I think it's time for caution. Okay, enough of the preamble. Let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So here's the NASDAQ. And just, first of all, I just want to say, we have indicators, obviously, long-term and all that. But, it doesn't take you don't have to have a proprietary black box market timing system to say, yeah, we're in a pullback. We broke the 50-day line, but, it's kind of going from bottom left to top right as well. So that's what I mean, where we're in a correction. It could easily go further. Maybe it doesn't. I'm all for that. But, it could easily go further down. It could easily take some more time. But at this point, the main trend is still up, certainly for the NASDAQ and the big cap indexes, okay? S&P 500, same sort of boat, bottom left to top right, but we are breaking the 50-day moving average. And I never put too much emphasis, maybe yesterday meaning Thursday's reversal with NVIDIA, we gapped up, finished down huge, big volume, that sort of thing. A lot of stocks got hit. Maybe that was the final shakeout, but it does seem like there's, quite a few institutions that were really eager to sell that bounce. Okay, so we'll see how it goes from here. If we do bounce, we'll, as always, like I said, take it day to day, week to week. But for the here and now, basically everything is either, at or below the 50-day line. This is small caps rallying nicely today, but still below 50-day line. Mid caps, same sort of thing. New York Composite, just down the line. Not a disaster. It's not 2008 out there, but at least in the major indexes, it's not 2008 with anything, but it's not, a horrible situation with the major indexes. But at the very, least, almost everything is no higher than it was 2, 3, 4 months ago, depending on what you're looking at, okay? Same sort of thing when you just sort of broaden it out. This is the S&P equal weight. Again, good day to day, but, no progress here. I think we've talked about this, right, going back a few months. And then even look at the equal weight, NASDAQ 100 right here, I don't know, going back to basically the end of June. Okay, no net progress. That's just the NASDAQ 100 stocks. I think more, at least for me, both in terms of I'm a growth guy, but also the risk on, risk off sort of measure of the market. You look at a lot of the growth measures. This is the Momentum Fund, which we've looked at, MTUM. It kind of broke the 50-day here. Again, not a disaster. But it's been living now below the 50-day line for 3 weeks, okay? What else? You look at the FFTY, I mean, kind of a mess here, or the ARK fund, ARKK. Now, this is very volatile. It's had a huge run from the lows. But, this month I looked, in fact, I could look right now. Monthly, it's down 17.1% on the month as I'm recording this, which is, around noontime on Friday, okay? So just a lot of damage, clearly below the 50-day line. Even like the IBD 50 index itself, not as bad, kind of like the major indexes, but even this month, I think it's down. Coming into today, this month, it's down 10%, so maybe it's down 8 or 9% as of right now. Okay, so the intermediate term trends have cracked. At the best, you can say is they're neutral, so they're not up. Okay, and meanwhile, you are seeing. Here's the XLP. Okay, is it setting the world on fire? No, but certainly it's going up while the market's been sliding. This is another one I've been watching more and more. It's SPLV, which is just the S&P Low Volatility Index. If I understand it correctly, it's just the 100 of the S&P 500. It's the 100 stocks that are the least volatile, which probably it overlaps with XLP quite a bit, I would imagine. I've looked at some of the holdings, but same sort of thing. You've just seen really since the month began, buying in this, okay, really hitting new recovery highs just in the last 2 or 3 weeks, obviously while the markets come down. So there's a move in the defensive stocks, breakdown in leading stocks. You're seeing some of the high flyers, like here's Bloom Energy, which obviously had a huge run. Again, I'm not saying it's done for. You'll never hear from it again. But at the same time, even after coming off its lows as I record this, it's down 40% from its highs in 3 weeks, okay? Palantir, PLTR, this is one that, we'll see. Maybe this is 150 round number support, and this is your, correction. And again, I'm all for this being the bottom, 200-day moving average support. But after a huge run, this is kind of what they call a late stage base failure, big volume selling. So there's just a lot. I would just say at the very least, the onus is on the bulls. I never want to say, oh, this stock is toast. It's going to go down here. I don't know. But what I can say is it's not acting right now. It hasn't really acted, right for a while. It hasn't done anything net for a few months at this point. So there's just a lot of damage out there. There's other high flyers I'm sure you're aware of, okay? That said, so we would be cautious. I can't show you the number of new lows on this, but the new lows have been up. The aggression index, we kind of looked at the NASDAQ falling and the defensive stocks. So the evidence is bad. At the same time, the leading indexes of this move have been the big cap indexes. And you always want to key more off the leadership. You don't want to say, well, small caps. Now, maybe small caps take the leadership or, going forward. But right now, you kind of want to cue on that. And I would just say to this point, the S&P 500 is, again, not to swap charts, but we're down 4.3% from the high. Okay, the QQQ is down, QQQ, the NASDAQ 100 is down 7.3% from the high, just as I'm recording this, okay? And of course, it's going to move around. So it's not the epic disaster. Like I said, it's bottom left to top right. But I think it's also in a correction. I think yesterday's big move down with the NVIDIA reversal was something that got everyone's attention. Was that enough to put in a low and get everyone to panic? Hopefully, but maybe it's just something where we're now in the middle stages of this pullback. Maybe there'll be one more leg down that really freaks people out on some bad jobs report or Fed doesn't cut rates or whatever. So we'll see how it goes. Right now, caution, but stay flexible is really what I'm trying to say, okay? As for stocks, it's a little, I don't want to say it's early. I'm always looking for relative strength. But, as time goes on, you're looking for things that can hold up here that aren't, defensive, okay? So one thing that sticks out right now is medical stocks. Now, maybe these are defensive. Maybe people are buying medicals because they have growth to them, but they're also kind of insulated from, the AI CapEx cycle or the latest jobs report sort of thing, okay? Either way, we are seeing a lot of these stocks. This is NTRA, NTRA. It was a big winner here from the fall of 2023 to mid 2024, mid 2024, and then it based out for about a year, and now it's broken out on the upside and actually been accelerating higher here. Okay, so we'll see how it goes. It's not just going to go up every day, but so far NTRA looks good. Garden Health we've mentioned before, up and down forever. Really only this thing bottomed. It didn't bottom in 2022. It didn't bottom until 2024. And you can see up and down, even here, up and down. Started to change character earlier this year, and then obviously the earnings gap recently looks good, and it's been acting well. There was a buyout in the group this week, Exact Sciences. That's probably helping sentiment there. So again, we'll see how it goes from here, but so far, so good. Okay. And I got all types of stocks here that I'm watching just because I'm sort of casting a wide net. This is Sienna, CIEN. Okay. So it's had a huge run. It broke out here, but a couple of things to me. Number one, which I've mentioned before, the stock should be, we'll see, earlier stage. Okay. Meaning it just got going, just got going 2 months ago. Okay. 2.5 months. So it's not like it's been running for, 7 months, never mind 2 years or something like that. Number one. Number two, it had a million weeks up in a row. I'm not going to count those out, but call it 10 weeks up in a row, just eyeballing it. And now we're coming down here on big volume sharply for the first test to the 10-week line. They do have earnings in early to mid-December. It looks like December 11th. So let's just see how it goes. This certainly doesn't look pretty. I mean, there's clearly a lot of selling there. So I'm not saying it's a buy at the 50-day line, but how it acts from here will tell me a lot. Even if it doesn't, just zoom higher to new highs, if it can kind of hold up in this area, maybe the market goes down next week, this thing holds up or whatever, it'll be kind of interesting. So I'm still keeping an eye on that one. Western Digital, now this one is later, I don't want to say later stage, but it's not as early stage. This is WDC, hard disk drive stock. You can see from the lows it's had an amazing, amazing run. But again, you're getting this very sharp pullback, not as sharp as the speculative things. It's down 23%, don't get me wrong, but some of these other things are down, 45% in 3 weeks. So Western Digital has come in here. Again, yesterday was kind of ugly, but again, to the 10-week line or 50-day line in this case, in this chart. So we'll see how it goes. Not like overwhelming selling here. Numbers are great, so on and so forth. So just something I'm monitoring going forward. JFrog, I think I've mentioned this. This is FROG. A lot of the recent, in fact, just to show you one, this is going off script, but this is like Datadog, which we mentioned a couple weeks ago. Really nice sales earnings, nice tightness in here, nice earnings gap, and just completely failed. You can see it's just kind of come straight back, giving it all up. Not that it can't bounce, but that's not what you want to see. I mean, not only is it not what you want to see, that's abnormal to do that, okay? Because there's probably a lot of buyers in here that are trapped. But when you look at Frog, this is one of those stocks that gapped up. It might have gapped up the same day, actually. Had 2 days in a row of big volume buying, and it has pulled back and hacked around. But you can see it's holding up pretty well in the software space. And on the weekly chart, again, it kind of looks like Datadog in the sense that it's coming out of maybe a longer term structure, okay? Some buying volume here, nice buying volume cluster here a few months ago too. So that's one to keep an eye on. Las Vegas Sands, gambling has been, Wynn Resorts was strong earlier in the year. These aren't, the fastest movers, but they had a pretty good run. LVS was a little bit of a laggard, but after earnings, the most recent earnings report here, LVS has been, a better performer than Wynn, and it's, pulled back in here, but very grudgingly. Okay, so even though the S&P has been breaking the 50-day line and so on and so forth, Chinese stocks have gotten hit. A lot of their whole business is overseas at this point. Certainly a controlled pullback. Okay, Wayfair, which I do find this one. I find it interesting because similar to Western Digital that we looked at, it's had a huge run from the lows. Obviously, a totally different business. It did have a prior shakeout here, so it's a little bit different a couple months ago, and then gapped up on earnings. Again, this was like JFrog. It was a recent earnings winner, but instead of failing, don't get me wrong, it's hacked around here, but it's basically holding up pretty well despite the fact that it's up, hugely from the lows, hugely from a year ago, all that stuff. It certainly has every reason to kind of correct sharply and break the 50-day line and all that, but so far it's refusing to do so. So symbol W, that's something that I'm kind of interested in. Some of the aerospace names, don't get me wrong, like everything's getting weighed on by the market, but this is ATI. It's kind of an on-again, off-again stock, as you can see. It gapped up on earnings here, beautiful run. Gapped down on earnings here. Not that it got killed, but just kind of was dead money here for 3 months, basically. Then recently gapped up on earnings, and it's just basically been, given the market, it's basically been holding tight here, ATI. Some other aerospace names like Hexcel, HXL, not as fast a mover here. You can kind of see it's a little bit more compressed. But it has been trending up here. Nice earnings gap. Again, I don't know, 3-4 weeks ago. Pulled back, but holding in there pretty well. So some of those, not as dynamic as, it's not going to be your AI stock, but some of the aerospace names look pretty good. Gold. Gold is not, my bailiwick per se, but this is gold. This is GLD, first of all. So it had a huge breakout right here. And I guess that was early September. Nice flat period in here, nice breakout. Clearly got a little bit, over its skis, pulled back. But so far, it's been a 10% pullback. It's holding in there. Could gold fail? Sure. But so far, it's holding in there pretty well. And what I've just been looking at is in top 10, there's been a few names that while gold, pulled back and then bounced and is kind of right here, there's been some names that pulled back and then bounced up here, hit new highs and then pulled back. I'm sorry, that chart got kind of messed up. But so this is AngloGold Ashanti, AU. You can see it's just nice move to new highs here. Had earnings report, reacted well to that, and holding in there pretty well. Barrick Mining is another one, symbol B. Nice new highs in here, holding in there pretty well. Compared to gold, even this is GDX, which is just the general gold fund. You can see this is okay. It's hanging around the 50-day line, but some of those others I would favor. If gold has a resumption, my guess some of these things that are already at new highs or at least hit them recently will be in favor. There's a couple other names. This is potential turnaround. This is Albemarle, I think is how you pronounce it, ALB. Lithium, electric batteries. This was a huge, had a huge move, pandemic, and into sort of 2022 actually, but then a huge decline. This is the monthly chart just to see how long-term that decline is. Okay, but you can see on the weekly chart, it has been trending up since the low like everything else. And it's actually been accelerating higher here, recently reacted well to earnings. You can see it kind of, really hit the 50-day line and just soar higher. Shaking out here, down, then down this morning, and then back up as I record this. So maybe it consolidates in here, but just kind of a name to flag or whatever. And then last but not least, I'll mention, Viking Holdings. This is cruise ship. Now, the one thing I would say is if you look at the other cruise ship stocks, like this is Royal Caribbean, looks terrible. I mean, maybe it's so bad it's good and it can rally from here. But Norwegian, I think it was, NCLH, yeah, that looks terrible. But Viking's got a little bit of a different story. It's newer. It just came public. Middle of 2024. And, on the weekly chart, you can it had this base here during the tariff panic, broke out, had a nice run. And it's been grinding lower here, like so many names. Just, the last few months have been tedious. But really hasn't done anything. Again, you step back, you're like, it's not a bad chart, Reported earnings this week, nice volume on the upside here. And as soon as as I'm recording this, some pressures come off the market and the stock is popping. So you can see there's a variety of things. There's actually some steel stocks that look good. I mean, that's not going to be my main focus, but in top 10, we cover all these things. So I'm forced to look at everything, which I'm happy about. And we are seeing, I wouldn't say a lot of strength out there, but we are seeing a decent amount of names that are still relatively resilient or have taken their lumps, but are kind of holding the 50-day line much better than the major indexes and the equal weight indexes and all that sort of thing. Okay. Going forward, I think there's really three scenarios that I talked about this on the webinar this week that we had at Cabot. The first scenario is we started a bear market here. The new lows tell us that the broad market's diverging. It's a market top, AI bubble, and we're going to go down for the next 6 to 9 months. It's always possible, but like I said in the intro, the odds are against that. I mean, to have two huge declines back to back, number one, number two, just, some of the blast off indicators back here, the fact that we went up 30% in 5 months in the market is, those usually only happens during longer, 12 to 24 months advances. I'm not saying we have to go up another 7 months in a row, but the odds of us just shaping here, I'd say, are small. So that kind of leaves the other two possibilities. Number one, this is a shakeout. We just completed it or we're close to completing it. We shake out a little bit more and then we go. I think it's possible. I would say it's a little bit less likely than the other scenario just because we did see some selling yesterday. A lot of stocks have cracked. And my guess is the first bounce back, we'll see some, resistance in some of these things. They might bounce back sharply, but they'll probably still going to be people, big investors that want to lighten up. The other thing is that we've started sort of a quote unquote real correction. We've broken down. And sometime over the next, going from here, we're already 3 weeks into it. So another 4 weeks, 5 weeks, we go down, we come up, we come back down again, typical correction stuff. And whether it's the year end or January earnings season, we kick off a new uptrend. Either way, there's going to be another uptrend is my point. There's going to be some new leadership. There's going to be some old leadership that reemerges too. Okay, there's going to be some names to buy. The goal is to get from here to there in one piece, your portfolio in one piece, your confidence in one piece. So right now, I would definitely lean toward being cautious until proven otherwise. The onus is on the bulls, but stay flexible. Keep your watch list up to date. There will be opportunities here going forward. Okay, that's all the time I have for today. Again, if I don't hear from you, if I don't correspond with you, have an awesome Thanksgiving weekend. And be sure to come by again in a couple weeks for another Cabot Weekly Review.